Good evening, this is Fife, presenting Silicon Valley's daily tech news on hannewsnetwork. Tonight, I want to take a deep dive into one of the most extraordinary developments in the world of cryptocurrency. The United States government has officially become the largest known holder of Bitcoin. This is not merely a story of confiscated assets. This represents a profound shift in how governments interact with digital currencies and, by extension, how they view the future of money itself. The journey begins with a series of high-profile seizures. In October 2025, the Department of Justice executed what may be the largest single Bitcoin seizure in history. Over 127,000 Bitcoins were taken from a complex international cyber fraud operation led by a Cambodian businessman named Chen Jai. The operation was notorious for its scale and audacity. Victims were targeted through a deceptive pig butchering scheme, a method that involves gaining a victim's trust and then slowly defrauding them over time. Many of those involved were trafficked workers, coerced into facilitating these schemes. The human cost behind these numbers is sobering. The bitcoins in question had been moved into unhosted wallets, making them difficult to trace and recover. Yet through meticulous investigation, law enforcement agencies were able to seize these assets. The funds were staggering. The bitcoins had been used to finance an extravagant lifestyle, including luxury real estate purchases and high-value art acquisitions. This seizure alone was valued at approximately $14 billion, a number so large that it is almost impossible to comprehend in everyday terms. But this seizure was only the beginning. It was soon followed by a strategic initiative from the U.S. government to formalize the management of confiscated digital assets. In March 2025, an executive order established what is now known as the Strategic Bitcoin Reserve. This reserve was designed to maintain bitcoins as a national financial asset, a sort of digital equivalent to the gold reserves that nations have held for centuries. The reserve incorporated not only the recent seizure but also bitcoins from previous high-profile cases, including the Silk Road case, resulting in total holdings of approximately 325,000 bitcoins. Unlike other government assets, these bitcoins are not intended for trading. They are to be maintained securely as part of a long-term strategic approach. This move marks a clear departure from the traditional role of governments in cryptocurrency. No longer are they solely regulators or enforcers. Now, they are active participants and investors. As of October 2025, these holdings are valued at around $36 billion, making the United States the largest state holder of Bitcoin in the world. From my perspective, this development is revolutionary. The very idea that a nation-state is accumulating and preserving digital currency signals a new era in finance. This raises many questions. How will these holdings impact the broader crypto market? Will it stabilize prices or create a new form of government-backed influence in the cryptocurrency ecosystem? Security is another important consideration. Maintaining hundreds of thousands of bitcoins securely requires advanced infrastructure, sophisticated cybersecurity, and careful management of private keys. The government has committed to keeping these assets safe, understanding that the value of these holdings is not only financial but also strategic. The unprecedented scale of these holdings is remarkable. We have never before seen a nation-state declare a cryptocurrency reserve of this magnitude. This could set a precedent for other governments, signaling a willingness to exploit digital assets as a formal part of national financial strategy. It also reflects the growing significance of cryptocurrency in global finance. Bitcoin and other digital assets are no longer fringe investments. They are increasingly considered as legitimate components of national economic planning. The strategic Bitcoin reserve could also serve multiple purposes. It may act as a hedge against fiat currency volatility, a tool for digital market engagement, or even as a lever in international financial negotiations. From my perspective, one of the most interesting aspects is the integration of seized assets into a structured reserve. Rather than liquidating these funds, the government has chosen to preserve them, effectively turning crime proceeds into a strategic national resource. This decision also highlights the U.S. government's proactive approach to cybercrime. Each seizure represents not only a financial recovery, but also a step toward accountability in the digital world. The accumulation of Bitcoin by a government also changes the dynamics of trust in digital currencies. Citizens and markets alike may view this move as an endorsement of cryptocurrency as a legitimate store of value. However, it is not without risks. Concentrating digital assets under government control could create new points of vulnerability, both in terms of cybersecurity and market dynamics. There are also implications for privacy, regulation, and the philosophical nature of decentralized finance. Bitcoin was designed to be decentralized, yet we now see it being accumulated and held by a central authority. This paradox is fascinating to consider. On one hand, the government is embracing innovation. On the other, it introduces traditional centralized control into a system designed to be trustless. The strategic Bitcoin reserve also invites questions about long-term economic strategy. Will future administrations maintain the reserve, or will it become subject to political considerations? Market reactions have been notable. Crypto investors are closely watching government movements, knowing that such large holdings could influence market stability and price trends. The strategic Bitcoin reserve may encourage other nations to explore similar initiatives. This could lead to a new form of global financial competition centered around digital assets. In addition to its financial role, the reserve serves as a technological statement. The government now possesses not only substantial Bitcoin holdings, but also the technical expertise to secure, manage, and potentially integrate digital assets into national operations. As we look ahead, the implications are vast. From currency policy to cybersecurity, from global finance to market psychology, the strategic Bitcoin reserve represents a convergence of multiple fields in one unprecedented initiative. It also underscores a broader trend. Governments are no longer passive observers in technology. They are actively engaging with the digital economy, shaping its future through both policy and asset management. From my perspective, this is both exciting and cautionary. The move demonstrates forward-thinking leadership, but it also brings new responsibilities and challenges in managing highly volatile assets. The U.S. government's Bitcoin holdings have already sparked debates in financial circles about the nature of value, risk, and state involvement in emerging technologies. There is also an educational component. The public now has a living example of how cryptocurrency intersects with governance, regulation, and strategic planning. I believe this initiative will be studied for decades, both as a case study in innovation and as an example of the evolving relationship between governments and digital assets. In conclusion, the establishment of the strategic Bitcoin reserve and the accumulation of over 325,000 Bitcoins by the United States is a landmark moment in financial history. It marks a shift from regulation to participation, from oversight to strategy, and from observation to action in the world of cryptocurrency. HAN News Network will continue to monitor developments in this story, covering new Bitcoin acquisitions, reserve management, market impacts, and policy decisions. And that wraps up today's segment on Silicon Valley's Daily Tech News. I'll be back with more updates on the world of technology and finance.